Thank you, Mitali, for that update. Let's move on to a bank then to get more information and the earnings impact. And Kamakodi, Managing Director and CEO of City Union Bank, joins us today. Mr. Kamakodi, hi, thank you for joining us on ET Now. Let me start off with the ECL guidelines that has come in to begin with. What kind of impact do you see for the next? Are you going to take a one-time hit, or is it going to be a gradual one where you're going to put in, and what kind of impact will it have on you?
Basically, the overall whatever shortfall is there, since we have our capital adequacy ratio well above, let's say 20%, we can afford to take that hit in the capital itself. And even after taking care of that, we should be adequately capitalized, and things should be in such a way that we will not be having any issue with the P&L on an ongoing basis.
Let me come back to your earnings. The credit growth was strong at 26.5% on a year-to-year basis. Yet, if I'm looking at your guidance, you're just saying that it's going to be 2 to 3% above industry growth. Why are you taking such a conservative stand?
See, the what we said that 2 to 3% over and above the industry is what the minimum level what we wanted to let's say always ensure, which we have done in the most of the years in the last couple of decades. But at the same time, whenever there is let's say we are able to see the opportunities both in terms of the growth and also with the confidence on the asset quality and all, there is no point in missing those opportunities for growth. And we had one such situation in the last quarter, contrary to our expectation. We were able to see that. And in fact, we could have seen last year, much of our growth was in fact, let's say, even though the MSME, like agriculture loans, including the gold loan and all, constitute the most important part of our overall portfolio. The gold loan had in fact contributed for a significant growth in the last year, and we were able to get opportunities within our risk appetite, which we did not want to lose. In fact, last year, or even to a greater extent, a year before last, let's say we lost some opportunities because we were in the process of changing our LOS and other things. So whatever ground we had lost in the earlier, let's say, years, let's say when the opportunity came, we were able to encash that.
Mr. Kamakodi, do you expect gold loan growth to moderate going into FY27, given that prices have also cooled off a bit?
Yes, we have actually kept, like say, about the 32% as our overall contribution for the gold loan in our loan portfolio, which we have already breached. So incrementally, it will be in proportion to the overall advances growth rate we are achieving. But at the same time, I want to, like say, focus the fact that when the gold loan prices skyrocketed, almost all members in the banking fraternity, in fact, did not increase the per gram gold rate beyond a point, having sufficient cushion even beyond the RBI stipulated norms. That's why even when the gold price crashes, like say, the entire banking system is by and large protected and without any issue. So there is sufficient cushion for even for like say some more like say reduction in the gold prices for not only us but the entire banking fraternity itself.
You've been able to meet and exceed the ROA guidance that you're given, which came at 1.56%, and your NIM also came at 3.87% at the end of Q4. And that's within the guided range. What is the kind of range that you're looking for in FY27?
We hope that all these ratios of, like say, return on assets, net interest margin, asset quality, and all should be almost in the current level with within a small band plus or minus. The overall outlook currently is pretty decent. the expected impact of the US-Iran, let's say, conflict is not yet visible now. In terms of the asset quality, be it on the, let's say, NPA, gross and net NPA, or even the SMA front, perhaps we are having a decade low, or even we can say to greater extent in some of the parameters in the lifetime low. So overall, we are currently at a situation where we should be able to see things in a brighter perspective as we enter financial year 27.
Give us a sense of your loan mix, and are you seeing growth coming back into the MSME sector as well for you going forward?
Yes, we could see, like say, in fact, about like say 5-6 quarters back, we saw the segment in which we are operating. They have started, in fact, going for investment. Particularly, it started with the investment in the solar. Subsequently, you might have also heard from the RBI policy statements, the capacity utilization of the system has started increasing, and you are getting closer to the point where incremental investment in the capacity expansion is required and all, which we are able to feel currently. We have started seeing people coming and asking for investment in the machineries and all to go for capacity expansion and all. Some amount of positive trend we are seeing in the segment after, like say, maybe post-COVID and all. After many years, we are seeing this sort of trend. Even when like say, the situation in the US started, particularly export to US and like say, non-availability of the deal and things like that, the tariff and all started creating problem. The customers were able to find out markets elsewhere, and there was no, like say, steep moderation in the utilization and all. At this point of time, even though we are cautiously and anxiously keeping the fingers crossed, waiting for any positive potential impact because of the US-Iran conflict, as we are talking now, we are yet to see any negative impact, and everything whatever we are seeing currently is on the like say positive side. But at the same time, we are cautiously like say monitoring the situation to ensure that we are on top of things if at all any issue because of the global uncertainties happen.
Mr. Kamakodi, it was a pleasure talking to you today. Thank you very much for joining us and giving us a perspective of what's coming ahead in FY27. Thank you for joining us. And we are slipping to a break. Coming up after the break is Mid Cap Masala.